Welcome to another episode of the Reboot Chronicles, a no-holds-barred forum with global leaders, authors, entrepreneurs, and CEOs about how organizations stay focused on growth and innovation in unprecedented times. I'm your host, Dean Dubugras, coming to you live from Reviv's North American headquarters in Chicago, and we would like to thank you for joining us from around the globe today. I'd like to welcome Henrique Dubugras to the Reboot Chronicles. He is a serial CEO, board member at Expedia, and co-founder and co-CEO of Brex, a leading FinTech provider of corporate cards and spend management solutions that's raised over $1 billion from prominent VCs like Kleiner Perkins and many others. And they've already had their fair share of reboots, which we'll talk about today. Henrique, it's really good to see you.
It's really good to see you as well. Thanks for having me.
Yeah, it's good for you to join us. I usually don't ask this as a first question because it's too softball-y for the Reboot Chronicles, but I'd just love to hear, why did you and Pedro start this company?
Yeah, for sure. So our background, we're originally born and raised in Brazil, and we both got into technology really early. I started code when I was 12. Pedro started when he was 9.
Yep.
And we met last year of high school, and we started a payments business down in Brazil called Pagarma that was kind of the Stripe of Brazil. So we were doing kind of like B2B FinTech back then, right? We grew that business, sold it to like I would call this company called Stone, which I would call maybe the Square of Brazil, without the Square Cash.
More like the circle.
Then
The
moved to the
Brazil,
US. Yeah, exactly. And then we moved to the US, went to Stanford for a few months and dropped out to start Brex. But I would say that, we were looking for ideas when we started in kind of like B2B financial services. And so it was kind of like a little bit more natural. We already were in the acquiring side, and then we always thought the issuing side was really cool as well. And we found this opportunity when we were starting that all these startups, they had raised millions of dollars and they couldn't get a corporate card, even though they had raised millions of dollars. And we thought, wow, that sounds dumb, and like, why is that the case? So we created this underwriting model and process that we would underwrite them based on their cash balances. So you get higher limits, no personal guarantee, great rewards, focus on kind of the technology and startup sector, which is kind of where we started out, and we went from there.
Yeah, having maxed out a few credit cards on startups, I hear you. And so why didn't you stay in Brazil? There's a lot of good startups going on down there.
Well, it's interesting you say that now, but like when I started, there weren't any technology unicorns. I would say Mercado Libre, was kind of the Amazon in Brazil, was the only one I would say that was worth more than $1 billion. Nubank was still sub $1 billion, Stone was sub $1 billion, XP, all these companies. So it sounded really hard to actually build something big and impactful from Brazil. And we always like this idea of, coming to Silicon Valley, right? It was our dream since we were seeing all the, started reading TechCrunch.
Yeah. Well, having run a few companies in Silicon Valley, it is tempting, especially the first time you go there. But you ended up in LA. You like LA better?
Yeah, I would say that like after we went remote, I think that, this idea that you can live wherever you want and live your best life and still do your best work, I think it's something that we truly believe in.
Yeah.
So I think there's a lot of, there's some disadvantages, some advantages, and depending on the business, it may or may not be the right decision. But for us, we believe it was the right decision.
Right. Yeah. And with over 1,100 employees, the remote thing is a little challenging. We can touch on that when we get into your reboot thing. I just had one other question structurally. Having had a lot of VCs on my boards and still on a few now, they don't really love the co-CEO thing. How's that go?
We never had any issues of ours. I would say that most of the VCs that invested in Brex, they actually saw it as one of our biggest strengths and advantages. And the way we structure it, though, is maybe different than other co-CEOs. We structure it in internal versus external.
Smart.
So Pedro is the internal CEO, so he has all the direct reports. And I am the external CEO. I have no direct reports. But he has a lot more time to do the stuff that, he's really good at. Like he's very obsessed about building the right systems to make the company run right. And understanding what's happening and driving results across the company. And I really like a lot of the external stuff like fundraising, meeting with customers, enterprise sales, investors, partners. And I just have a lot more time to do those things. So I think it's like a pretty strong combination, and it's part of why I believe we were able to execute at the speed we did.
Yeah, that's smart. That's the way I would do it. I mean, I mostly do chairman roles now, and I'm more the outside deal guy and revenue facing versus the inside guy. So that's smart. That probably makes it a lot better. But you kind of live and learn, I guess. So let's jump into, in a short amount of time, you've had a couple reboots. Going into 2024 here, it's everyone's trying to adjust, whether it's small companies or large tech companies. So you've been through the layoff phase and all that stuff, but yours was more of a pretty large shift last year, where you kind of took your SMB strategy and kind of lopped it off and really walked away from a certain sector. I think the way you put it was companies that weren't either professionally funded or VC funded or funded enough, quite frankly, which isn't a bad idea to kind of like look at those differently from ones that are, VC backed, very different. And so I guess the first question is, why did you do that? And then the second one, maybe we can jump into how do you handle SMB versus enterprise? That's kind of just to give you a little follow up there.
Yeah, for sure. So let me just share a little bit of kind of like the evolution of the company, right? So we started with our first product was this corporate card for startups, and it started doing really well. And then we launched our second product, which is this kind of like bank account for startups. It also just started doing really well. And then we were we raised a lot of money, and we're like, okay, we need to expand from here. So where do we go? And we kind of saw three options of expansion, right? Like we could go and say, hey, we're this credit card and bank account for startups. Why don't we do that for another sector like e-commerce, for example? That was option number one. Option number two is like, hey, we have all these startups that are growing. Why don't we build, tools and services for these growing companies as well, so they can stay with us the entire period? And the third thing is like, well, startups are small companies, SMBs are small companies. Maybe they have a lot in common. Let's do it. And I think our choice was let's do all of them, which made it not be really a choice.
Right.
But I think what happened is as we expand to SMB, the sheer volume of customers, right? Like we went from onboarding, a few hundred customers a month to 5,000-10,000 customers a month. So everything broke, and all the resources went to fixing the scale and scaling. And what happened is that our core customers, the startups themselves, they started feeling that we weren't taking care of them because all the support was really slow and broken, and like we had to automate a lot of processes that missed a lot of nuance from startups. So we got to this point where we saw, look, competition increased. We need to kind of like, if we want to deliver a really good service, we need to focus, right? And
exactly.
And it was a really hard choice because, we had obviously like raised money saying that, we're going to do all these SMBs and do this and do that. But we saw, where our business was going, where we wanted to take it. And a lot of the products we were building were products that we wanted that required you to have some level of scale, right? So, the main business for Brex today, besides credit cards, is like spend management software. So, you need to have a lot of spend to want to buy a spend management software, right? If you're a small business, you don't have that much spend.
Yeah.
There's not much to manage.
Well
so, we made the hard choice of focusing, okay, we're going to focus on startups and then mid-market and enterprise, because they kind of want the products that we're building more versus the SMBs. They wanted more loans and other things like that.
Right. Yeah, exactly. They're in the struggling phase. A lot to unpack there. I mean, most boards, especially after you raise a $1.1 billion, I think you were fresh off a round of about 300 million at the time. Most people are like, stay the course, and it takes courage to pivot and reboot and sometimes admit things that you weren't talking about a handful of customers. You're talking about, maybe tens of thousands that you had to pivot away from. And that's a
Yeah,
tough.
it was maybe 70% of our customers actually at the time.
Wow. That must have been a cold morning in Silicon Valley, as we say.
Yeah. It was really hard.
So you really didn't pivot away from SMB. You're like, hey, we need ones that are spending money, have a lot of money. A lot of those now have come down as they're rebooting themselves. Some have been on the program. And I guess before we kind of get into trends, so how do you look at enterprises? It's not mass enterprise because they're all taken care of by the big banks and hundreds of vendors with massive software, legacy system. So you're kind of like upmarket, kind of mid enterprise kind of tier. Is that what we're talking about?
Yeah. So look, we are actually going up market all the way to the enterprise. I would say, kind of like our largest customers today are, Airbnb and DoorDash and Coinbase, which are still kind of technology driven. So obviously easier to go to market, but,
Still
have a
emerging,
lot of the problems that
but
do
big.
those.
Yeah, yeah.
Yeah. And I would say that if you look at kind of the value proposition that we have on our spend management software, it even gets like the problems get more acute as you grow. So it actually like a really good fit with, pretty large companies, right? So, the first thing that we solve is this idea of like, hey, employees, they don't really follow a lot of the process, right? Like finance teams, they write these beautiful policies and processes, and then
No.
you go to the employees and they just don't follow it, right?
Right.
And we make it, so easy for them to follow it that they actually do, right? So we can increase compliance rates while still reducing the effort for the employees. And that's something, again, the more employees you have, the more policies, the more complexities, the more important that is, right? And the more bureaucracy a company has. And, we see a lot of companies wanting to move away from that bureaucracy. Number two is this idea of kind of like all the integrated systems, all your spend in one place. A lot of times you go to companies and they have, if you want to travel, this is one system. Then the expenses, this system. Then the corporate card is this system. Then to pay a vendor through an invoice is this system. And like if you want to do like pay a vendor of a credit card, it's a different card. And kind of like integrating and bringing that all into one place, right? That's like something that a lot of our customers value really well, because you can have like the source of truth for your policy, for your controls, for your approvals, kind of like in one single system.
All right.
And also global, right? The more companies grow, the more global they are. And I think that was something that was exclusively for large companies. Now every startup is almost starting global from day one, just because people realize that there's talent everywhere. And a lot of times the software works locally, but when you go to a global scale, especially if you get outside of US, Canada, EU, everything breaks, right? Like different tax regulations that you need to account for. The cards don't really work as well. You need to collect in local currency, bill locally. These are all kind of
Transaction
challenges
fees.
that we solve.
That's the part I don't like about international. Those international transaction fees.
Well, exactly.
Yeah. So
Exactly. So
what's the you hit on something? What's your secret sauce on employee engagement? Like, is it that, hey, you can just use your phone to do your expenses like all the other companies are doing, or what's the how do you make it easier for
I think
the traveling
I think there's
person?
two
I guess.
things. I think there's two things. One is we give enough context at the time of purchase so what's allowed, what's not allowed. Because I think we believe that most employees are trying to do the right thing, but like who knows what the policy is in some drawer, some Dropbox file. You don't really know how to do it, right? Like, and we make it super easy on your phone. You can open and say, okay, for this purpose right here, we call it a budget. Like for this budget, this is what I'm allowed to do. And if you're in policy and you have, it just get automatically approved, right? You don't even need a manager approval because we couldn't do all those checks automatically. And the second thing is just we give out more corporate cards. So some of our customers, one of our very big customers, they have 100 corporate cards when we join for people, and out of 9,000 employees, now they have 9,000 corporate cards. And because what we did is that we embedded the level of control in the corporate cards, so finance teams just feel more comfortable giving them to everyone. Because I think that just makes it super easy, right? If you just swipe, we can get receipts automatically for you. We can generate memos automatically to you. Most of our customers, the experience is the employees that they just swipe their card and that's it. Their expenses are completely done for them. They don't have to do anything else.
Yeah, makes it. So, what I've noticed, just a chairman of a couple of companies, one company we're using Spendesk, another company we've got one of the big four banks, another company, they're all over the place. Probably using QuickBooks, all I know. So it just, every time I look at not just the FinTech space, but where you guys are, kind of card-based expense management at the core. I know you're doing other stuff, but it just seems like a competitive mess out there, almost like the ad tech industry. At one point, investors stopped investing in it because there's too many players. It was too confusing. So it's not that bad, but yeah, how do you stick out, and kind of win in the next few years?
Yeah, I would say that what happened with fintech in general and players like Marqeta or Stripe Issuing or a few others ones is that the bar for launching a competitor became really low. But then when you actually start scaling it, it's a lot harder than it seems. right?
And trust too.
So I think, yeah, exactly. So I would say that, if you look at kind of the market, I would say there's going to be a lot of competitors that do well in the kind of like simple use cases, lower middle markets. Like I just need to add a couple controls, something better than what the banks have. But when you start moving kind of like up market, right? The complexity, as you go global, as you grow to a lot of different systems, you have a lot more controls. The level of complexity increases a lot. And I would say there's not a lot of companies that are able to do that. And I guess our scale just on the corporate card allowed us to invest so much. Like, since we started building these new products, we probably invested $300 to $400 million in building them over the last few years. And it's a scale that's hard to do.
That's a lot of tech stack. That's people and
Yeah.
technology, I assume, yeah. How about
Yeah,
partner?
yeah. Mostly people.
Yeah, mostly people. Okay. So yeah, it just seems like so many companies are claiming to do the same thing. But yeah, I just feel like trust is a big issue here. That's why some of them go with the big banks, especially if the VCs already have relationships with someone like a Silicon Valley Bank or something. So how do you, just given that all the noise out there, how do you view, the way I kind of unnaturally scale companies is through pretty massive partnerships and really smart strategic deal making. And how do you look at that over the next couple of years to scale, to a much larger business?
Yeah, I think
Is that a big component, I
we
guess?
have we always were really good at partnerships with kind of like channels. So especially like, for example, the
Yeah,
VCs and accelerators and accountants and lawyers, like all these are partners we had to have over the years to distribute our card. I think now we're kind of updating what's the kind of like more enterprise version of that.
right.
And we have a couple partners that we launched, a couple in the works, but I do think I agree with you. It's kind of like very important to work with them and have that. But on the point of like everyone saying the same thing, I think that's one of the biggest lessons for me of end of 2021 end of 2022 and now beginning of 23 is something that we're a lot more focused on. Is before, I think we spent most of our time just thinking about the product and how to make
Yep.
the product better. And I do feel very good about how good we are at our product. And, when we get into a deep sales cycle, like we win a lot because of that.
Right.
But I think it's just as important, especially as you're going to like larger customers, how you position your features in a way that matters to the customer. So it's people can understand the differentiation, right? Because as you said, it's very right. Like a lot of the enterprise software, everyone says the same stuff, and so how do you like, so we've been spending a lot of time just in messaging, trying to like, how do we message this in a way that's differentiated and our customers understand why it's different? And I think I probably invested too little in that in the past of my own personal time.
Yeah, it happens, and especially in unicorn phases. You just do a Google search on any of the top 10 companies in any category, and everybody's poaching their naming, saying we're better. They literally are. The search feedback is, why would you use them? We're better. So it's a lot of claims.
Yeah, exactly.
A lot of claims, a lot of names. It'll probably sort itself out. But the whole, at Kellogg, I teach a lot of entrepreneurs and corporates about how to come together, dancing with startups, and put them through this whole build, buy, borrow exercise. So, how do you unnaturally scale faster? Should you build it yourself? You've done a lot of that. Should you buy it and acquire some tools and things or companies? And should you borrow, doing really strategic partnering? And most people think of the borrowing part on the product roadmap side, and I kind of say it's both product roadmap to the left and product and go to market on the right, and those two come together. Where as you change your go to market, are you finding your product roadmap changes a little bit too?
Absolutely. I think this is one of I've been spending a lot of my time trying to learn for some of the best of like what it takes to be kind of like and go from like a super product driven, kind of like focus on startup driven company to now like, more like mid market enterprise software company. And I think one of the things that I learned is, when you're like a technology company, you're as a founder, you're extremely opinionated about the roadmap. Right? This is what we need to build. This is it. So you have like a 2-3 year roadmap, right?
It's your
And
baby.
if you go to
Yeah.
like some of these best, yeah, exactly. But if you go to some of these the best enterprise software companies, they actually like adjust the roadmap every 90 days based on like what they need to, serve clients and customer needs. They're actually like way faster than some technology companies on adapting their roadmap, which I think is like super interesting. And I think that's like super important, right? Like you shouldn't be building like a lot of custom code and saying, hey, we're going to build this just for this. But I think you should be listening to your customers and what they want to buy and making sure you can reprioritize quickly to adjust to that.
Right. Yeah. Yeah. And what have you guys invested much in AI specifically around, enterprise? Let's just call it expense management, money, that kind of thing. Very different from consumer, but let's face it, these are consumers using your enterprise apps.
Yeah, no, absolutely. We invest a lot in AI around Brex, right? And I think this new wave has been there's so many interesting opportunities and ideas and that we're implementing. I think, we have a bunch of stuff to announce over the next few months, but I would say we're definitely think that a lot of enterprise software is going to change because of AI. And I think people have been saying that for a while, but I think now it's definitely gotten to a point where it's getting reliable enough to actually be able to do this. So we already using a bunch of stuff like automating receipts, right? And providing insights.
Please do.
But well, we already do that one, so you can start using it right now if you want.
Just for the travel crowd, they're all laughing. It's like it's such a nightmare. It's always a nightmare. I promised I'd get through an episode without saying Chat GPT and the other wannabes, but now it's all the rage. And I go to cocktail parties and moms are talking about it. They seem to be experts at AI now, and I tell them like, well, I've been chairman of an AI related company for years, and did you know there's an application in beauty and in wellness and this and that? And they're like, no, I just thought it was for typing and getting answers out of it. Mm-hmm. So the good news is all boats are lifting up, in the tide. But I think there's just a lot of false expectation out there of like, what can it do? What should it do? And how do different verticals? This to me, there's a question in here somewhere, but how do these different verticals actually deploy technologies like that? And there'll be tons more out there that'll come. Versus how does the company who invented it show it off? It's two different phases, right? How does FinTech really take that to the next level?
Yeah, I think that FinTech is a broad category, so it's hard to say.
Yeah,
I would say the only thing in common
hold you there, yeah.
The only thing in common would be I do think that around kind of like more automated compliance is probably like a big piece for FinTech, because I will say the amount of people in FinTechs that are just looking at documents, looking at contracts, looking at, and making judgments, I think a lot of that could be automated away. It's not going to be perfect, but if you can just automate 70% of it and then just send 30% for humans, that's already a massive improvement over what's happening in most companies. So I think that's probably common in FinTech, but I think in general, in enterprise software, one of the things I believe is a lot of the reporting and insights used to be dashboards and metrics and things, and like graphs. And I do believe that we'll have a layer of it that's now is going to be, kind of like natural language based, right? And being able to get insights into your enterprise software products more by asking questions and by having to find out, in the software where these things are and how to do it. The same thing with like configuration, right? Like, why couldn't you just say, hey, can you ship me a new credit card to this address? And that's automatically happen instead of having to find some dashboard somewhere to do it.
Yeah, exactly. Yeah, the next episode after yours is WWT, $17 billion technology solutions company. And companies like that are, they're taking care of a lot of the old legacy IT systems, doing digital transformation, but they'll probably start entirely new businesses based on some of this technology coming out. You guys did some, your thought leadership is pretty decent. You've come out with these trend reports, which is, good. What you just came out with one that kind of projects the next 18 months. What are you seeing 23, 24?
Yeah, I would say, look, still a lot of innovation happening. Seed rounds are still happening, a lot less than before, but I think that's a good thing. Not everyone is getting funded. We're seeing travel completely rebound. I think the type of travel changed from travel to seeing customers to travel to seeing coworkers. It's kind of like a big trend that we're seeing, and the amount of group travel, that's happening.
Some people are
I think that's like,
being out there every week. Some people are traveling just to travel because they forgot they had that.
digital
That's the thing
nomads.
it's one of the things they control in their job. They can, like, I have to go on a trip. Okay. So that's a
Exactly.
driver in your category for sure. Because for the last 2 years, so many corporations save billions by not.
Yeah, and I would say it's definitely a driver, and I think also, we can help companies figure out, is this travel even worth it, right? Like, is this a trip that should be happening for in a company paying service?
So how do you
Which
do
I
that?
guess it's
That's a good one.
I think, I think it's just like making the process a little bit. You need to request a trip on Brex for a lot of companies, where you can request, and then people would, you need to justify why you'd want that trip, and we can get reporting and insight into why people are going to trips and things like that. But then once you're in trip, then we know the policy, we know everything just flows through, right? So it's like one little ask that people need to approve, but then everything goes through, and all is part of kind of like a budget system. So you can know that as a manager, you get a $50,000 T&E budget for your team. You can decide, okay, you want to go for this, but I only have $30,000 left or $10,000 left. Is this really worth it versus this other trip? And being able to manage that yourself, right, and keep accountability over it.
Yeah, that's good. What else do you see coming up in the next couple of years? Your trend report is mostly on startups because that's your target market. And just how about in your category, though?
What do you mean, the category?
Your company, basically the category you're competing in. You've got.
Yeah.
It's usually the last question I ask, but I'm going to ask for more personal stories next. But it's like, it's based back to that same question. How do you become $1 billion, ARR company, and where do you see this? What is if we look back at this episode 2 years from now, what's your company going to look like at that point?
Yeah, for sure. I think that it will look probably somewhat similar to today, but bigger, in the sense of, we have a lot of clients. We went up market. We have a good flow of startups. So we're still getting the earliest and brightest technology people to start with us, and the advantage they can stay with us until they're really big, right? From, when they public launched all the way to being a public company. And we're managing 100% of the spend globally for these customers, right? From credit cards to travel to procurement to everything in one place, and doing that globally. So if we can just do that over the next few years, that's already a big win in my books.
Yeah, so both broader and deeper market-wise. So back to go-to-market and product roadmap, and there's probably a lot of build, buy, borrow decisions in there along the way. Have you guys acquired anything yet?
For sure. We've acquired a few companies, maybe 3 or 4.
Yeah, okay, yeah. So it's in your DNA, which is, I don't know, it just seems like there's some good opportunities out there right now. Henrique, I really want to thank you for joining us. A lot of entrepreneurs, a lot of corporate people, a lot of people trying to reboot themselves into the next half decade here, switching into. I coach a lot of people at Kellogg, and corporate is nice, but also you should consider, doing your own startup, joining one, being involved in one, maybe even at the same time. But so for aspiring entrepreneurs out there, or maybe ones that have already started their company and they're stalled a little bit, what kind of advice would you give them, just based on the journey and all the learning you've been through in the last 10 years? What would you tell
them? I think, dream big, but focus. I think that's probably the two things that made us success and probably some of the mistakes. I would say always important to dream big. And that was the first value for Brex when we started, and it's still the most important value. But I would sequence it, I would say, your dream, instead of trying to do all at once in your company. Just be really good at a few things and then keep going from there. We probably try to do too many things at the same time. So dream big was the thing we did right, and that's motivating. You can hire amazing people. You can raise a lot of money. But I would sequence it instead of parallelize during the journey a little bit more.
Yeah, I mean, I appreciate your honesty about, hey, we took on too much. We tried to do everything. That, to me, is a common thread that I see, and I've done it, for instance, of course, but I see in entrepreneurs, I see in startups. It's like, why do we need to be in all these markets, and how are you going to fund it, and it's hard for them to figure out what's the biggest payoff. How do you choose, the right targets? For you guys, it was pretty easy. It's like, well, we're going where the people who have money. or spending?
Well, that's usually a good a good direction. It's higher to get money from people who have money. It's very hard to get money from people who don't have any money. So
yeah, unless you have a way to make them money. It sounds like you're on both sides of the equation.
yeah,
Make
totally.
more, spend more wisely.
Exactly.
I want to thank you for joining us. You've been great. Appreciate you joining us. And you've been listening to Henrique Dubugras, who is the CEO of Brex. This is Dean Tobias with the Reboot Chronicles. I want to thank you for joining us today. We will see you soon.